Hi guys, welcome back. Um, for those of you who attended the Zoom meeting, I would like to apologize. The network today has been hectic. The internet is very slow. I think that's why the Zoom meeting had a problem. I couldn't even share the document I was trying to share with you guys, so it was not productive at all. Like I promised, that I'll do a video. This is the video, and if you're viewing this video, that means you're viewing it through a link that I shared, and this link is only for those who are part of us, who are part of the Blue League group. I didn't want to make it a public video because I promised you guys a Zoom meeting and I couldn't deliver because of the internet. Load shedding is just a problem. But anyway, we have to continue. We have to move forward because I can see that this load shedding is going to delay our process. It's going to delay our learning. But anyway, we have a lot of things to do. It's almost the end of the year. We have to get this moving. So today I'll be talking about three things. The first thing is everything that you guys are going to learn through our Blue League Markets Academy, Forex Academy. Then number two, I'm going to share with you guys a secret in the market, in the Forex market, which is called the phases of disaster, the psychological phases of a disaster. I'm going to explain what this has to do with the Forex market, and I'm going to show you patterns that no one has shown you before. Then I'm also going to talk about, then I'm also going to go into detail about what order blocks are. So this will be the introduction to smart money concepts. The first thing that I want to talk about is order blocks and explain to you guys what order blocks are, how you see order blocks, but it will be just an introduction and we're going to move on from there. I'm not going to make this video long because I want most of you to access the video, view it up until the last second. So I don't want to make it long. I just want to make it as interesting as it is and as educational as it is. So like I said, the first thing I want to talk about is the Blue League Markets for Blue League Market Forex Academy. What I'll be teaching in this whole course. So this is like a course outline of everything that you guys are going to learn. The first lesson will be Introduction to Forex Exchange. I'll be talking about the history of Forex and Asian trading. Then I'll also talk about the exchange of currencies and how they made the Forex market digital. Then I'll also talk about how they developed the patterns we know today in the early stages of trading. Then lesson two, but the first lesson is for those who have no clue at all about what Forex market is and what Forex trading is, the first and second lesson. But if you feel like you know what it is, but you still want to learn, you can also take part in that lesson. Lesson two will be Introduction to the Forex market. So I'll be talking about what charts are, the apps to use, your MT4, your trading views, your MT5s and the likes, and the types of brokers to use. Obviously, we have broker A and broker B, which broker is good, why some brokers are not good. I'll be talking about that. Then we'll also talk about candlesticks, your engulfing candles, your shooting star, your all those types of candles. Then we'll also talk about the spread, the leverage, and the lot size. This, in a way, is account management. What is a spread? Why do we have leverage in forex market? And what is a lot size? And how can we take advantage of that? And how these things can also disadvantage us in the long run if we don't use them correctly. Then I'll also talk about indicators. So it's just to give some sort of a background, put some flesh in the skeleton, and talk about what we actually have in the forex market. So I'll talk about indicators, your parabolic sell, your moving averages and all that, which is things I don't use, but I want you guys to know about them because that's where I started to in the forex industry. Then we'll also talk about the forex pattern, your ranging market, your uptrends, your downtrends, your flags, and all that. Then we'll also talk about the trading type of trading styles, because we have many different styles. We have smart money style, we have your retail style, we have your fundamental style. Then we just have a lot of trading styles. Then we'll focus on those trading styles. Then the last point on lesson 2 will be liquidity introduction. Lesson 3 will talk about the introduction to retail style of trading. We'll talk about trend lines, support and resistance, head and shoulder, breakout and retest, flag pattern, impulse, and correction. Then lesson 4, I'll give you all the strategies I know on retail. And these strategies work to some extent, but we no longer use them as blue league markets, and we'll tell you why we no longer use them. Then we'll talk about the Nasdaq VNZ formation strategy, the Nasdaq intraday strategy, support and resistance, advised breakout strategy, patterns and indicators, and how people use those patterns and indicators as strategies. So I'll teach you all of this, but at the end of the day, I'll explain to you why retail trading is not actually the best way to trade. Then lesson 5 will talk about fundamental uh, style of trading, which is fundamental retail trading. What is fundamental trading? The types of fundamental events and news. For example, your NFP and all of that. Then we'll also talk about the apps to use for fundamentals, your CNBC, your trading.com, and all of that. Then I'll also give you strategies which people use on fundamentals, which I also used, but I don't use anymore because now I'm a smart money trader. So your 1 minute strategy, I'll teach you that. The buy and sell strategy will also teach you that. Trend line build up strategy, we will teach you all those strategies so that you understand them. Then afterwards, lesson 6, manipulation. Sorry about the spelling. I don't know why I didn't do the spelling check on this. I'll do it. We'll tell you why everything you've learned in module 1 is part of manipulation. So we're going to teach you module 1, but afterwards we're going to tell you why module 1 is not working. Those who attended the first Zoom meeting will probably know now why Zoom module 1 is not working, because of retail trading is full of manipulation. You actually being part of liquidity. You know why? The reason it is a lot of manipulation is because they teach you this the minute you start knowing about forex. If you can go to YouTube videos, most YouTube videos are full of this, your trend line, support of resistance. Most mentors, this is what they teach. So the big guys, the market makers, the banks, the institutions, the hedge funds, they know that we being taught trend line, support and resistance, head and shoulders, Nasdaq V formation and Z formation strategies, Nasdaq intraday strategy. So they manipulate this in order for us to lose. You know why? Because in the market industry, in the forex market industry, someone has to lose in order for those that win to benefit. That's why the market is estimated to have a turnover of 6.6 trillion within a day because of liquidity. But in today's video, I don't want to focus more on liquidity. If you don't understand liquidity, then you have to go to my previous video. You'll be able to understand everything that I'm talking about. Then in module 2 is how we trade in the Blue Leagues Market Academy. Lesson 1, we'll talk about introduction to liquidity and manipulation, the market secrets, what is liquidity, type of liquidity, retail as liquidity, how not to be part of liquidity, blue league market liquidity strategy. Now guys, I want you to be aware of something. Lesson 1, will obviously teach it for free. It's for the public group. Lesson 2, it's also for the public group. Lesson 3, it's also for the public group. But from lesson 4 going downward, this is for the paid group, for those who are going to join our private group. So, because we can only go that far, I mean, we also paid a lot of money to learn all these things until we understood. So our mentorship is very cheap. As you guys, as we told you when we started this academy, that we're not here for profit, but we're here for teaching you guys how not to be on the wrong side of the market. That's why we're even doing tours. We'll be going to Botswana, we'll be going to Swaziland, we'll be going to Mozambique, and hopefully we'll also go to Zimbabwe and Namibia. That's why we're having these tours this coming December, and we're also having a boot camp this coming month, which is October. So please save up, be part of these things so you can learn more, because we can only go to as far as we can in terms of the public group. But please try to save up and pay so you can become part of the paid group, because from lesson 4 in module 1, lesson 4, 5, and 6 will only teach to the private group. Then from module 2 going up downwards, this is going to be paid stuff. But anyway, then we'll continue. Lesson 2, we'll talk about order blocks, which is what I will be doing today for free, because this video will go to the um, um, public group. Then we'll talk about the types of order blocks, point of interest, which is your POI, breaker block, and QML. What's the difference between order block and breaker block, and QML, and how we use it to actually make money. The break of structure, which is your boss. The change of structure, which is your chalk. Sorry about that spelling. Like I said, we didn't do any spelling check, proofread this, but we'll do that. Major and minor structure, your swing high and swing low, your strong highs and strong lows, and why we call them strong highs and strong lows. Then we'll also talk about your weak unprotected highs and lows. Then lesson 3, we'll talk about order blocks, low and high probability order blocks. We'll continue talking about order blocks, but now we'll put more emphasis on it. We'll talk about the high and low probability POIs. Then we'll talk about mitigation. Lesson 4, we'll talk about imbalances. What is imbalance in Forex? How to identify imbalances? How is imbalances felt? We'll talk about all of that. Lesson 5, we'll talk about multi time frame analysis, moving from a higher time frame to a lower time frame, and actually going to as far as the 1 minute time frame to actually place your trade, which is in correspondence with your 4-hour chart, so that your stop loss become as minimum as it can be. Then we'll also talk about the fractal nature of the market. Lesson 6, this is where now we'll just put everything together and give you our blue league market approach or strategies. Now, smart money is not really more about strategies. That's why we put the word approach. It's how you approach the market, how you listen to the market, how you react to the market. You shouldn't actually react to the market. You should just let the market lead you. Then you should take advantage of those opportunities. So the first strategy will be the Nasdaq and the US 500. The second approach would be your US 30 or uh, Dow Jones, your currency strategy, and the fundamental way of trading in smart money, so that you don't become part of liquidity. Then lesson 7 will talk about the types of entries and stop loss and take profit. So we have aggressive entry, safe entry, confirmation entry. Then we'll tell you how you make your stop loss to be as minimum as 5 pips to 10 pips. Then we'll have take profits going into 100 pips and all that. We want your risk to reward ratio to be something like 1:100. That's how we trade in this academy. Then lesson 8 will talk about the risk management, your lot size, leverage, stop loss, and etc. Then lesson 9, individual development plan, your IDP. I want to spend a minute talking about this. Like, now an IDP, it's an individual development plan. In this academy, when you join our private paid mentorship, you become part of our family. And in order for us to make sure that you're actually learning and you're actually developing, we'll give you something called an IDP. Now, IDP will have all the headings of these lessons and points explaining that you should learn this and this and this and this. Then we'll assign you to a mentor, which is part of our academy. if you learn something, let's say for example we're talking about risk management. After you're done learning about risk management and you're done learning about lot size, if you and your mentor agree that you have understood everything that there is to learn about lot size, then the mentor will sign digitally, so then you'll also sign too. In order for you to get a certificate from our mentorship and also be part of our team after learning, after the learning process, your IDP has to be completely filled. You know why what we are avoiding? We are avoiding this thing of people starting something and not finishing. People starting mentorship but not willing to learn. So, in order for you to actually get a Blue League certificate, which we'll give out at the end of the course, then in order for us to invite you to be part and be an ambassador of our Blue Leagues academy, you need to have an IDP which is signed up to 80% and completed, so that by that time we would know that this person has learned everything there is to teach in this academy, and these guys are now professional traders. Like I said, we're going to have ambassadors in countries. That's why we're going to Botswana to start a relationship with traders in Botswana. We'll live there knowing that the guys who are going to take part will make sure that their IDP gets signed. They become mentors, Blue League mentors in Botswana for Botswana, Swaziland in Swaziland for Swaziland, etc. So that's all I wanted to share about the course outline for Blue Leagues Market. Now, guys, you only left with this week and next week to sign up to join, because from next week onwards, we'll be moving on. We'll be starting with the boot camp. Now, let me make something clear. If we'll be coming to your country and you pay to be part of the boot of the conference in that country, you automatically uh, go in our private group for free, right? So that you guys don't think we're trying to make you guys pay for the boot camp, but then also pay for the for the visit, which is the conference. No, you only pay one thing and become of the boot camp and the conference. That's all about our Blue Leagues Market course outline. Now, let's go to something interesting. I want you guys to learn about something called the emotional response to a disaster. It can also be called the psychological phases of a disaster. Now, this thing is taught in varsities for those who will be studying things like psychology and all that. It's something which is actually used in a lot of things. Now, to explain this so you understand it before I take it to the forex market, I just want you to understand this graph and how it works. Um, let's make an example about COVID-19. When they announced COVID-19, we were here. So this is the pre-disaster. This is before it happens. But there were warnings. So there was someone who had COVID-19. So we knew that someone got it. So there were one, two people, three people, and all that. But as we proceeded, we started getting threats and warnings. Now they told us that, look, we have COVID-19, right? And it's going to affect us. Now, as the graph goes down, that's where many people started having COVID-19. Then impact, it's where we decided to say, you know what, this thing is real. Let's close down the country. That's where we started having a lockdown. But guess what? The graph didn't continue going up downwards. It started going up. Now the lines represent the emotions of a person. Now, if it goes down, that means it's bad, but if it goes up, it's positive. Let's take it like that. But it started going up immediately after we closed down the country. Now, you guys can ask yourself a question of saying, why did it go up? It went up because some people were happy. I mean, schools were closed down, people were not going to work, but they were getting paid. So things were like, in a way, we had an advantage of that. Like we could take more time to spend with our family and all that. Then it went up to a point where we thought, look, man, this thing is not that bad. I'm having more time now to even read books, watch movies, watch series. We thought, you know what, we're in the honeymoon phase. But when you go to the honeymoon phase, that's where companies said, you know what, we cannot pay people just for sitting at home. So from today on, if you're not coming to work, we're doing retrenchment. As you guys know, during COVID-19, a lot of people were retrenched, people were fired. Um, so that's what happens after honeymoon. That's why the graph starts going down. Because what? Now we're starting to realize that people are dying, hospitals are full, um, people are not getting paid, things are stopped. So it's not happening, it's just bad in the country. Now it went down. At this stage, this is where we're starting to learn more about this virus. We're starting to come up with vaccines, and we're adapting to the situation. We're going back um to work. That's why they say coming to terms. So we're starting to realize that no, this thing is not a joke. We have vaccines now. We're getting people vaccinated and all that. As the vaccinating is going, then we'll have those stages where people die of vaccination and people will be scared. That's why you see this drop a little bit. But the government will convince us that no, man, these vaccines work, blah, 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 and will continue. Then the graph will go like this. At this point, this is reconstruction, a new beginning. This is what's happening now. We no longer wear masks, we no longer, like, even in the news, they no longer talk about how many people have COVID-19. So we're starting to, this is the new normal. We're actually living in a world with COVID-19. So if you want to learn more about the emotional response to a disaster or the phases of disaster in terms of emotion, you can go online and search it. You'll get it, but you will never get it in terms of Forex. But this thing is there in the Forex industry and will explain. You can get this graph in many forms. This is the same graph as this one, but it's just that it's in a different form. This is the pre-disaster. This is your threat or your warning. This is the honeymoon stage where we're not going to school or work or varsity. We feel like, yeah, we're on top of the world. This is the honeymoon stage. This is where we realize that people are dying. COVID-19 is taking people's lives. We're losing jobs. This is where, as a country, we decide, look, man, we need a vaccine. This is the vaccine working, people going back to work, vaccine killing people dropping. This is the new normal, like I explained. This is also the same graph but in a different form. The pre-disaster, the warning, the threat, the impact, COVID-19 being serious, killing people, closing down the country. We're thinking we have time, but now people are losing jobs. All that I explained, it's still the same um, graph, but it's now different. It's still the same graph, but it's different. The new normal is there. Impact can, so it doesn't necessarily mean that the impact has to, we can have impact while people are thinking, look, since the country is closed, they're thinking, wow, this is nice. Then we have the honeymoon stage there. Now, guys, you will be shocked. This pattern, you find it in the Forex industry. Why do you find this pattern in the Forex industry? Now, those who didn't watch the liquidity video should go and watch the liquid. They should, in fact, pause this video, go and watch the liquidity video, come back, continue with this video, because that video also plays a huge role on why they do this, why they integrate things like this in the Forex market. They do this because they want to play with our minds. Banks and market makers, forex makers, the guys who move the market, those guys are smart people. In fact, they hire the most intelligent people not only to study the forex market, but also to study the human mind and how it works. So, for some reason, they have seen that this pattern works. They can manipulate people and actually make a lot of money from people. When I say people, I mean me and you, the guys who trade using our laptops and our internet, which is bad in our days because of load shedding. As I told you guys, we find these patterns every single day in every chart on the forex market. This is before the impact. This is the impact. This is the honeymoon stage. No, this is when we say the country is closed, blah, blah, blah. This is the honeymoon stage. This is when we realize that things have taken a left. then it goes down. Then this is when we start reconstruction and finding vaccine going up. This the drop is where we spoke about people saying that the vaccine is not working. Then let's say we have another wave of the COVID virus, and all that. Then it continues and it goes up until we have another normal. So another normal can be this point. I didn't highlight it here, but even here is the same thing because this is the normal. That's the honeymoon. It goes down. Um, this is the reconstruction. This is the new normal. So this can happen even you can turn the picture upside down. It's still the same thing. For example, this is the new normal. This is when it hits. That's the honeymoon stage. This is when we realize that things are bad. This is where we start reconstruction. By the way, this is Australian card 1 hour chart, so you can see that we actually taking these things from the market. Let's just convince you more. Let's just show you guys more pictures to convince you. I think this is the same picture. Let's continue. This is also still audio card, but now it's inverse. It's doing inversely. This is the normal. It goes down. That's the honeymoon. Then it goes up. Then reconstruction. Like I said, guys, in order for you to understand these patterns, you just have to go to the market. You'll see them in many forms, not just in one form. You can see it in the first way. Then you can flip it. Let me see if I can flip this. I'll have to edit it so I can show you guys when it's flipped. It's like what? Let me try edit it. Let's rotate it. You can also see the market in this form. It will start here, go like this. You can also see the market in this form. Let me flip it. Yes, you can see the market in this form. It will go. The honeymoon is now inverse. Do you see what I mean? So yeah. Okay, let's cancel that. Let's just say cancel to that. Okay, so it can be flipped. Let's continue with more example. um this is the flipped side of it. This is the normal. It goes up to honeymoon, it goes down, reconstruction, normal, it goes to the honeymoon stage, it goes down. This is the thread second wave and all that. Still audio card. Let's go to Nasdaq. As you can see, guys, this is when things are normal. Then there's impact. It goes up to honeymoon, then it goes down, then it goes up for reconstruction. This is also the normal. When everything is fine, it goes up to honeymoon, it goes down, then it goes up after reconstruction. Same thing. You can actually take this as a new normal. It goes up, then it goes down. Same thing. As you can see, guys, these patterns, this is Nasdaq 4 hour. This is the normal. That's impact. That's honeymoon. It then goes down to where things are bad, where we get the vaccine, then it goes up. So sometimes you'll find it being as perfect as this one. Sometimes it's actually hard to see. It takes a person who trades this a lot to see it. Normal honeymoon, reconstruction, normal honeymoon, normal impact honeymoon, construction, normal honeymoon, construction, just like that. Yes. Now you can pause the video, take a picture so you can see it clearly. This is when everything is normal. This is your impact. Then it goes up to your honeymoon. This is dose solution meant where we realize now things are bad. We actually panicking. This is the trigger event. This is where we realize that we need a vaccine for this COVID-19. This is reconstruction. It goes up. This is the new normal. This is impact, honeymoon, goes down. So you guys, this pattern exists in the forex market. This pattern exists. This is the inverse of it. This is the normal. This is the honeymoon. This is where we get the vaccine and things start working out. So guys, we get this pattern in every forex market, can be US 30, it can be Nasdaq. When you understand this, after understanding it, after researching about it and going and back testing and finding this pattern, then we'll teach you how to trade it. That's it in terms of the emotional response to a disaster. Let me just go back. Emotional life cycle of a disaster. Just go search this. Then learn to draw this pattern. Then go to your chart and learn to see these patterns. Then afterwards, we'll teach you. Interesting, right? Anyway, let's move on to another point. So today I said I want to talk about order blocks. Now, order blocks, banks and institutions sell and buy simultaneously. So, what happens in the forex market is when the big guys, the big banks, the big banks, the hedge funds, the institutions, what they do is they'll get to a point they will place buy orders, and they will place same orders, sell orders at the same time. They will place buy orders and sell orders at the same time. Let me just delete this and explain using the diagram which I've already prepared so that I don't waste time. So as you can see, the market was here at this point. What did they do? They sold, but they also have buy orders. So they have buy and sell orders at the same point. Let's take this point as our point where everything happened. Let me make it blue. So at point blue, they sold and they bought, right? So let's say they took 2 million to sell, then they took another 2 million to buy. What happens to sell when it goes on the opposite side? In this side, the sell orders are positive, right? But the buy orders will be negative. Now, in order for these guys to come back and mitigate, meaning they break even, because let's say this, since they sold, obvious sell would be winning. They'll go reach their take profit. Let's say they had a target here, they'll reach their target. So if they wanted to take 16 million, they'll take 16 million, reach their target. But their buy orders will be on negative 16 million, right? In order for them to make sure that that negative 6 million goes to positive, they'll then change the market direction, meaning go up until to that point. At that specific point, that's where your blue point started. That's where everything started, meaning your buy orders will then go back to 0, 0, right? So that's what institutions do. They open orders, but they open them simultaneously. Unlike me and you, when we buy, we just buy. Them, they buy and sell at the same time simultaneously. So if they say buy and sell within the same second, right? And for you to see that now the market makers have entered the market, you see by big engulfing candles like this, right? Just know that the market makers has started. Now, if you're those type that sell when they see a huge candle going down, then they sell, be careful. These guys are smart. They will manipulate. For example, there's this strategy they like posting online. They say after two big uh, engulfing candle, you should sell. So people will start selling, putting their stop loss where they'll put their stop loss here. You know what these guys do? They will promise okay, they'll pretend as if they're going down with you, but these guys will then do this. They'll wick your stop loss. After wicking your stop loss, after putting a wick on your stop loss, taking everything, they'll go down. That strategy is dangerous, so make sure after you've learned our strategies to stop trading engulfing. There's no such thing as engulfing candles. This is smart money coming to play. So now your order block is a point where the smart money guys sold and bought at the same time. So they need to come back to that point to mitigate, meaning to break even on those negative orders before they can continue down, right? So that's where you find your order block. So usually your order block could be your last candle, your last buy candle before the sell, or your last buy candle before the sell, your last buy candle before the sell, or your last sell candle before the buy. Let me explain it more further. As you can see, guys, this is a live market. This is your live Nasdaq market. I just want to show you guys few trades using your order block. So as you can see, this is my order block, right? I'll do another video and explain why this is not an order block, because I said it's your last buy to sell, right? That's your order block, but you refine it to this order block, and I'll explain in the next video why you refine it to that order block, because of the types of order blocks you have. So the market broke structure there. After breaking structure, so these guys did what? At that point they sold, right? But they had buy orders, so these buy orders were negative. They had to go back there to mitigate, meaning to break even before they can go down, right? So after break of structure, obviously they have to go and mitigate. Then this is 15 minutes chart. We go to 5 minutes chart. I just want to refine this order block so you guys see it. With order blocks, you can have a good entry. So let's refine this order block. We can refine it to this one, to this order block. And we'll do a video explain why that order block. Now, how you trade it is you place a sell limit. Then always you put your stop loss just above your order blocks, few pips above your order blocks. Then what's your target? Your target, you go to 15 minutes to get your target. Your target, we can target this order block. And we'll do a video explaining why we target this order block, because that's where all the moves started. So you target just before the order block. So this could have been in profit from the get-go. So trading order blocks, trading smart money, in fact, it's very, very profitable, right? So you took this trade. You took this trade. The market immediately went down, but because it went down and it had these big candles, what does it tell you? It tells you that the market mate has entered the market. That means we have another order block, right? Then the market came, it created another order block there. It broke structure, created another order block. Then this came and mitigated that order block. Let's go to 5 minutes so we show you this order block perfectly. This is the order block. It's called a breaker order block. We'll explain what a breaker order block is on the next video. Then you can put your sell limit on the open of your order block. Then put your stop loss just above your target. You go to 15 minutes. You target, because remember this trade is still active. It's actually now on break even. So we target the same target we had for that order block. Oh, I forgot to explain this one. This one came and it swept liquidity. After sweeping liquidity, your wick for this candle can be your order block. So you could have entered a buy there. Let's go to 5 minutes because there's an order block there. Could have entered a buy there. Let's go to 5 minutes. So this week becomes an order block. We were going to have a buy here. Stop loss just below that. Then our next target will be the closest order block on our left. So our TP will be just there. So we'd have that buy to sell. So this is the buy to sell order. We buy, then we're gonna sell later. Then we could have hit TP there. So trading order blocks is very, very, very. You can have a small account and actually trade and make a lot of money, because with order blocks you can turn 1,000 to a lot of money because it doesn't really have a lot of drawdown, meaning it doesn't become negative a lot. So here we also have a breaker order block. Could have had a sell limit here, then a stop loss just above there, then you target this order block. Then the first order you had could have hit TP there. This one could have hit TP there. This one hit TP there. Easy stuff. Then we also had this order block happening here. This order block could have had an entry, but this order block is not convincing. We are not going to take that entry. Then TP was also going to be there. So as you can see that the market did, let's see if it did reach TP there. Okay, TP has to be where, let's check order block. Then this order block. Okay, so yeah, it did hit TP. So that's why you are going to change the TP was before the order block. Because sometimes you need your TP to be before the order block because sometimes it doesn't go inside the order block. It will just touch it and go up. So these are all the trades you could have took on Nasdaq just by knowing order blocks. Yeah, that's it. That's everything we wanted to talk about today. Now, guys, just a reminder, please take part on our paid mentorship so that we can teach you all these things. You see how easy it was to analyze this. It was just break of structure, break of structure. Even here, it was liquidity sweep. Then we know there was going to be an order block. It had to go up, mitigate that order block, go down. Then afterward, it mitigated this order block. That's why the TP for this was here, hit TP there. Then here it mitigated a breakup block, went down. Easy stuff. Smart money, it's easy, it's efficient, and it makes sense. Then the TP for this order block, or we could have had an order again there and stop loss there, and TP we could have targeted this order block. But obviously you have to make sure that you go to your higher time frame and make sure that everything makes sense. Now, thank you guys. Hope this video is not long. Catch you on our next video. Botswana team, we're coming to Botswana. Venue is sorted. We just need you guys to start paying so we can secure your seats. Lunch will be served. Everything will be happening. It's a nice venue. We had a Zoom meeting with the property owners. They're excited. We're also excited. 3rd December we'll be moving from South Africa. We'll be driving from South Africa from the 2nd. We're going to get there, sleep there, make sure that the accommodation is fine. We're gonna have a conference from 8 o'clock to 4:30. Then from 4:30, those of you who will be still energetic will then go with us, show us places in Botswana, the nightlife. If you want to, go out, have fun with those who will be still energetic. A week after that, the following Saturday, we're going to Swaziland. I spoke to a guy today for accommodation. We're still waiting for their response. They said they will send us quotation today. We sent you guys a poster. You know how much you need to pay. Mozambique, guys, you guys, we only had few guys joining in, so please join if you're in Mozambique. If you're in another country we didn't mention, please comment, say something on the group. Let's get the group active. Let's get the YouTube channel going. Subscribe, get your friend to subscribe, comment, like. Let's get this family going. Thank you, guys.